conference for Bank of Baroda's financial results for the quarter ended 31st December 2022. Thank you for joining us. We have with us today Mr. Sanjeev Chadha, the Managing Director and CEO of Bank of Baroda, and he's joined by the bank's executive directors and the bank's chief financial officer. We'll start with brief opening remarks from Mr. Chadha. We have a short presentation that he'll make, followed by the media Q&A. Over to you, sir.
So thank you very much, Firoza. Very warm welcome to all of you on behalf of the bank. It's been 3 years, I think, since we actually have got together here in physical form. So it's really very grateful to you that you have been able to come over. Let me begin by introducing my colleagues on the dais. To my right, I'll begin, Mr. Ajay Khurana, who looks after our retail business. To his right, you have Mr. Lalit Tyagi, who we would be possibly meeting for the first time. He's taken over as executive director. He's in charge of international operations and a lot of platform functions of the bank, including human resources, risk compliance, etc. To my left, Mr. Debdat Chand, executive director, who's in charge of corporate banking and our treasury operations. And to his left, we have Joydeep, Mr. Joydeep Datta Roy, who is looking after digital, IT, and the subsidiaries of the bank. And to his left, of course, is somebody you are very familiar with, Ian D'Souza, our chief financial officer.
So before we go to the PPT, I think the photographers just want one group photographs. If you all can look at your stand. If you can keep the PPT ready, please. Yes. You can see the PPT.
Yeah, that should be fine. So we'll try to keep it brief so that there's enough time for questions. So as usual, we just have about 8 slides which capture the key highlights for the bank. In any case, you would have a copy of the bank's results and also the press release which captures things in more detail. Just by way of introduction, I think for us, if you look at the bank's journey over the last 2 or 3 years, I think maybe the year before last, the challenge was that if you really had to grow, you had to compromise margins, and we chose margins over growth. But this year, at the beginning of the year, we had guided that finally we are at that inflection point where it is possible for the bank to grow aggressively while keeping margins intact or possibly improving the margins also. So I think what you will see in the results actually is what we thought was a fair prognosis, that the bank can grow aggressively and also again make sure that we have margins and profits which will go along with that. So we'll go to the first slide. This first slide is really the first slide of the presentation that you will see on our website. This is a fair summary in terms of where we are as a bank. You would see that both deposits and advances have grown well. I think it is a fact that when we look at advances growth, it is broadly something the industry has profited from the cyclical upturn. We, of course, have grown probably a little better than the market advances. But what is equally remarkable is that along with that, the deposit growth is fairly good. And the challenge that we always discuss for banks, that there is an expanding gap between deposit and advances growth, is less of an issue for us. So you'll see that the deposits have actually grown by as much as 17.5%. Within that, domestic deposits by about 14.5%. And if you look at a CD ratio, and we'll discuss it as we go forward, it's not very different from what it was 2 or 3 years back. So the bank is well placed in terms of business growth. And if you look at the margins continue to improve. The net interest income is up handsomely at about 26%. That largely is on account of the fact that you have had both growth of business as well as growth in margins. In this slide, I think what would be the other thing that you might again want to focus on is again the profitability of the bank, which has possibly now reached benchmarks which we had promised for about a year later, but more as we go ahead with the presentation. So this is again when we talk about advances growth. So for us, I think what was important was that the bank really begins to fire on all engines. For us, there were two challenges if we were to go back a year. One was that a lot of segments were growing fast, but home loans, which is the mainstay of retail loans, was not growing as fast. And the second part, of course, was that as a matter of deliberate strategy, the corporate loan growth was a bit tepid because, as we have discussed in the past meets, there were choice. Either you grow your corporate advances or you keep your margins intact. But now you would see again that the corporate loan growth is catching up, and every single segment is double digits. But when you go to retail advances, that is where you see that there's a transformation of the balance sheet, which is in progress. So the overall organic retail growth is nearly 30%. And within that, home loans, which is about 70% of the book, retail book, is about nearly 20%. And at the other extreme of the graph, you have unsecured personal loans, which is growing at more than 150%. As we had guided earlier, this is the segment unsecured personal loans, which is relatively new for us and which is benefiting most from the digital intermediation, which actually has transformed the bank. And this is something which is having a very salutary impact, not only on growth now, because now it is very substantial. So I think our retail growth will actually on YOY be more than 10,000 crores. So it's contributing handsomely to overall retail growth, but also in terms of margins has a disproportionate impact. And also, if you see the right hand of the slide, you'll see on the top the growth as far as segments are concerned, and on the bottom side again the disbursements. So disbursements actually have grown much faster, which would mean that as we go ahead, we should see this growth sustain. Yeah. So this is where the deposit piece is there, where I believe we are a little bit of an outlier in terms of what we have been able to achieve here. So as I pointed out, total deposit growth is 17.5%. So now if you look at overall loan growth, 20%, deposit growth 17.5%, which is a margin of just about 2.5%, which is there. And therefore, what you find is that our CD ratio, domestic CD ratio, is still about 74%, which means that even as we go ahead, there's enough scope for us to make sure that we can actually keep our foot on the accelerator. If we look at the CASA growth also, it is reasonable, but quite expectedly, as the difference between the rates that we offer on CASA deposits and that we give on our term deposits, as that grows, people would likely move their deposits from savings to term deposits, which is why you are seeing this in an accelerated manner. International, again, is something which has been growing well, but here also the deposit growth actually is supporting that mostly as we go ahead. So if you look at the overall global the ratio of CD ratio, it is somewhere in the region of 80%, right? So 80% is quite reasonable, meaning that there's still scope for us to push it up by a few more percentage points. The margins continue to strengthen. If you see the yield on advances and what is the uptick as compared to the cost of deposits, the improvement in yields is still higher as compared to deposits, which means we might still have a quarter or two to run of getting advantage of the fact that there's a rising interest rate regime, which would help margins as we go along. And if you look at the NIMs and also recall our conversation in the last quarter, we had disclosed that our NIMs for last quarter had some one-offs. The NIMs on an actual basis were in the region of 3.17%. So there actually is an improvement of about 20 basis points on the NIMs. And I think this given the trajectory of yield and cost of deposits, I would believe that this is largely a sustainable number as we go ahead. This is also ahead of the guidance that we gave at the beginning of the year, when we had said that there will be a 10 basis point improvement. This is the profitability slide, where you see again significant improvements right across the slide. The net interest income has grown, as I mentioned in the opening remarks, 26%. So given the fact that you have loan growth at 20% and margins have improved by about 20 basis points, that's what translates into NII growth of 26%. Fee income growth is a little tepid. And I think that's something which I hope can improve going ahead. But there has been a little bit of an issue in terms of where the growth has been coming from. So in terms of project finance that gives you upfront fees, I think that's still something which is yet to take off. And I hope there's something that should improve as we go ahead. The profit before tax is something which is again, and profit after tax have both grown by about 100%. There's a bit of correction that you see on the right-hand side. That is again some adjustments which were there, some one-offs which were there. So you'll find that as a result of the one-offs, the operating profit is actually a little lower than the figure which is there, and the PAT is higher. So there was actually a Reserve Bank of India dispensation which said that provisioning on SRs, the security receipts that you get from ARCs, that needs to be accounted differently. So the provision used to actually happen before the operating profit. Now it is after the operating profit. So that is the correction which is there. Similarly, there were some one-offs in terms of taxation which should not get repeated, which is why you see that the PAT, but for these one-offs, would have been a bit higher. But I think what is important is that it will show you that there is a reasonable possibility of these kind of margin, this kind of profitability persisting in the future. So this is the 9-month figure, which again is important because again it's important to see that the quarter that we see is something which is in line with trends, and you will see that the performance is something that has been gathering pace over the last few quarters. Each quarter, profitability has gone up, and therefore you see that even when you look at the 9-month figures, they pretty much replicate what you have seen in the quarter under review. This is asset quality, where I think we see the most stark improvement. We had very frankly expected that we would reach these kind of numbers possibly by the end of the year. But I think the improved profitability of the bank has allowed us to be even more aggressive with again making sure that we provide for all unforeseen situations in the future, which is why you find that the gross NPAs have dipped well below 5%, and net NPAs are now below 1%, which means that the downside that can come to the bank's portfolio from the existing stock of loans is extremely limited. Equally, again, you would see that the slippage ratio is pretty much towards the lower end of our guidance. We had guided that we might be having a slippage ratio between 1.25 to 1.5%. We had 1.22. So I believe now something between 1 to 1.25% should be a more reasonable guidance for the year. Similarly, the credit cost actually is fallen far more sharply than we had anticipated, and it is far below the figure of about 1.25% we had again guided for. We believe now we should be guiding for possibly 1% and under. This is again a slide which demonstrates the longevity of the improvement that we have seen. The collection efficiency and the SMAs again have seen now quite a few quarters of very steady improvement and levels which again seem to augur well for the future, particularly SMAs, because this is the lead indicator for any stress which might be developing in the balance sheet. Yeah. So as a consequence of the profits, again, you find that the capital position is fairly robust, and the actual capital position, if we were to take into account the bank's accumulated profits, is still better. So our assessment as of now is that we will end up with a capital adequacy ratio at the end of the year, which will be north of 16%. It will be higher than what we started the year with. And this is in a year where we have seen very, very strong loan growth at 20%. Now, if we were to extrapolate that to the future, which means that loan growth possibly might again moderate a little bit as we go ahead, and profitability might improve a little bit, I think we are at that stage where we can again see the whatever we see as the foreseeable growth for the future, and also be confident that that can be funded entirely from the bank's internal accruals. We may not need to go to the capital markets unless we see growth which is much, much larger than what we expect as of now. So a couple of things I think which again are important to see in the longer term perspective, right? And which again we try to answer the question that are we simply benefiting from a cyclical upturn, or is there much more to the bank's performance? Now, if you look at the left-hand side of the slide, you'll see that our branches actually have come down over the last 2.5 years by a substantial number. Our number of employees has come down, but in each of the metrics on the right-hand side, you actually have very, very good growth. And mind you, this very, very good growth is when we actually had very slow 2 years. It's only this year that the growth has accelerated. Now, if you were to extrapolate this trend to the future, which means that you keep on gaining from the fact that your physical build actually is not growing and has actually come down over a 3-year period, and you see the acceleration that you have seen now, I think this augurs well for the bank. And again, for us to say that what you're seeing in terms of the performance of the bank is not only the advantage of, again, the tailwinds by way of a cyclical recovery, but also in terms of relative performance compared to peers, we should be actually doing substantially better, which we'll demonstrate in the next two slides. So this is again where how our growth measures up with the 9 major banks, private and public sector, who have declared their results so far. So as I've told you, it is our deposit growth which actually stands out really very much in comparison. So these 9 banks have average deposit growth of 6.8%. We have grown by nearly 10%. Our advances growth is also 1 percentage point faster, which is again where again the last slide comes in again, that what we are seeing is much more than a cyclical recovery. The bank actually is now outperforming peers by a reasonable margin. And this is again how it translates into profit. Similarly, again, you will see that whether it is in terms of NIM growth, costs, credit costs, profits, we are substantially again outperforming peers. And it is here that the operational piece is again, I think, to the most important, because this tends to be rigid. It is very difficult to remove these rigidities from the system. So the fact that our operating expenses are growing only half that of peers, right? While our growth rate actually is faster. In fact, if you were to look at the total business growth of the bank in the 9-month period, it is the fastest among all banks, private and public sector. So two things to see together. A, OPEX is growing by a very, very low number as compared to peers, and our growth rate, top line, is actually fastest or faster than everybody. I think HDFC pretty much compares in terms of growth, but nobody else. So I think these are the things to my mind which give us comfort that as we go ahead, we should possibly be seeing that this trend is sustainable. Before I close, I will just address one question, which I believe that if I don't address it, it will come from at least 10 of my friends here, right? So, and this is something that you might know from our past interactions, that we do not at all comment on any specific accounts. But I do believe that you have a right to ask questions about the bank, its portfolio, and also what it means for the bank. I think that's a very legitimate question that you would ask. So I will just put a few facts before you, a few numbers before you, that should give you enough reassurance that what you see here in terms of trend lines is unlikely discussion. Our exposure there is currently one fourth of the large exposure framework ceiling of RBI. So the LEF ceiling normally says that you take into account what are your outstandings, what are your undisbursed loans, what are your non-fund based limits. And the RBI puts a fact to that, that counts as the LEF exposure. So our LEF exposure is 1/4 of what is the permitted figure for us. So that is factoid number 1 that you might want to take into cognizance. Number 2, as a percentage of a balance sheet, this exposure has come down over the last 3-year period, right? That's again something that you might want to bear in mind. Number 3, of the exposure that is there, 30% is either in joint venture with a public sector company or is secured by a guarantee of a public sector company, right? So 3 things I would again repeat, because I will not be really saying much beyond that. You're of course free to ask as many questions as you might. I'll again repeat that our exposure again to the group is 1/4 of what is permissible under LEF guidelines. It is spread over a number of companies. Within that, 30% is either in joint venture with public sector companies or again secured by a guarantee of public sector companies. And this exposure as a percentage of our book has actually come down over the last 3 years. So thank you very much again for your patient listening. Open to questions now.
Thank you, sir. Question and answers now. If you have any questions, please raise your hand. We will try and limit your questions to maybe 1 or 2. We have to go to Zoom a little bit because we're on Zoom as well. So put your hand up first and get a mic to this second row. You can just introduce yourself as well. Yeah. Hi, sir. This is Siddhi from Reuters. Hi. I will first ask you about credit and deposit when you handle it. This is my first question, then I'll go next for this financial year.
So actually, our guidance was that our credit growth should be in line with industry or a little better. when we began the year, we thought that credit growth would be in the region of 12 to 15%. It obviously has surprised us on the upside. What is good is that it continues to be a little higher than the industry growth rate, and that's how we would want to position ourselves. This is what we have consistently held, that for us, in order of importance, the most important is asset quality. Second come margins, and third come growth. But we still want to protect the market share while keeping the other two intact. The deposit growth is something, again, which we anticipated is going to be slower than credit growth this year, which is again very normal, because there are periods when credit growth is faster and there are periods when deposit growth is faster. In aggregation, if we look at 3 years or 4 years, you'll find, as I mentioned, that a CD ratio is pretty much where it was 3 years before. So in aggregation, deposit and credit growth has largely matched up. There's not too much of a difference. And that's how we would like to keep the next year also. Make sure we grow at or better than industry in terms of loans. Make sure deposit growth is, again, something which our CD ratio allows us to do. And as of now, given where the CD ratio is, I would anticipate we can still have another year of faster loan growth as compared to deposit growth.
Okay, so my second question is, as you expected, it's on the Adani Group. So if you could help me understand, is there any concern right now about payment? I know 30% is, so you said it's at the public sector interest, right?
So what is the question there?
So if there is any problem
at all, as far as we are concerned, given how our portfolio is, we are completely reassured in terms of the quality.
And
Absolutely, there is no issue for the moment. It's early days, but again, the fact is that if we look at our portfolio, I think, and this goes, and I'm not now again going to refer to the group. Let me again put it in a broader context. Whenever we look at large groups, again, one of the ways you manage the risk is to make sure that in a large group, particularly if it has the advantage of being a diversified group, right? That you make sure that exposure is spread over a number of companies. And in a large diversified group, these companies normally belong to different market segments. Those market segments tend to behave differently again. So there's a risk mitigation which is there in that diversification strategy. So I would again say that as of now, if you look at a broader loan portfolio, including this group, I think corporate is something which is performing outstandingly well. This quarter, our slippage in corporate, which used to be thousands of crores, is something like 13 crores, right? If you look at our SMA figures, they are just 0.4%. So the fact is, I think all of us, and I would say this applies certainly for BOB, because I can say that unambiguously, but certainly even for the banking sector, given where we are, and given again the nature of business that our diversified groups do, I don't think the corporate loan portfolio is going to be a matter of concern for banks at all.
Okay, and one last question: has there been any communication from the bank to the bank?
So I think privileged communication is something that I must apologize, I cannot discuss.
Okay, thanks. Yeah. Okay, let him.
अभिषेक पांडे सवाल ये है कि आरबीआई ने कल जैसे ही उसका जो शेयर मार्केट्स गिरा है, आरबीआई ने सभी बैंकों से कहा है कि उनके जो एनपीएस है या जो भी डिटेल्स है उसको जल्दी से जल्दी शेयर किया जाए, क्योंकि एक बड़ा ग्रुप अगर इस तरीके की चीज होती है उसके साथ, तो उसका हर सेक्टर पर उसका असर पड़ता है। उसको लेकर बरोदा कैसे देखता है?
देखिए, मैंने आपसे पहले भी निवेदन किया कि जो भी हमसे सूचना मिलेगा उसको तो हम देंगे ही, पर जो भी सूचना जो है जो आप काम किया है वो मैं आपको भी दे चुका हूँ। तो इसलिए मेरे विचार में और मेरा यही निवेदन रहेगा कि यदि इस सभा के अंत में आप इसके बारे में दोबारा 5-7 सवाल पूछना चाहें, आप अवश्य पूछिएगा, पर अभी थोड़ी आगे बात कर लेते हैं, उसके बाद में लौट के इस पर दोबारा आ जाएंगे।
एक इजी से, क्योंकि इस समय कंसर्न अगर फाइनेंशियल या पॉलिटिकल क्राइसिस या फाइनेंशियल क्राइसिस जो सबसे इम्पोर्टेंट है। दूसरा इसमें सवाल यह है कि जिस तरीके से 7,000 करोड़ के आसपास की जो मीडिया रिपोर्ट्स है आगे से है जी, तो ऐसे में बैंक कैसे सिक्योर करता है कि उसके जो दूसरे शेयर होल्डर्स है उनको भी सिक्योर करता है कि आगे इस तरीके की दिक्कत नहीं होगी, क्योंकि आपने बताया कि का बचाव लगातार जी। तो
इसमें देखिए, फिर मैं जो है किसी विशेष ग्रुप की बात नहीं करूंगा, पर एक अगर हम जनरल हम बात इसमें करें तो जहां तक किसी भी लोन हम किसी को भी देते हैं तो वो हम उसको बुक्स के बेसिस देते हैं, बैलेंस शीट के बेसिस देते हैं। उसकी जो है शेयर बाजार में क्या कीमत है उसको नहीं हम देखते लोन को आंकने में। तो तुम्हारा जो लेवरेज रेशियो कैलकुलेट होता है कि आपका जो है कि बाहरी आपकी देनदारी कितनी है और आपका कैपिटल कितना है, वो बुक वैल्यू और बैलेंस शीट के ऊपर होता है। ठीक है, शेयर तो ऊपर नीचे रोज होते रहते हैं। तो जो हमारा लेवरेज रेशियो है उसमें शेयर में उतार चढ़ाव से किसी भी संस्था के लिए कोई अंतर नहीं आता है, नंबर एक। नंबर दो, जो हम लोन देते हैं वो अधिकांशतः वो सिक्योर्ड होते हैं। तीसरा, जो हमारे लोन होते हैं, क्योंकि हम टर्म लोन देते हैं या वर्किंग कैपिटल देते हैं, अधिकांश वर्किंग कैपिटल देते हैं, हमारे लोन जो होते हैं वो कैश फ्लो से भी सिक्योर्ड होते हैं। तो इसीलिए हमारी स्थिति जो है, बैंकों की स्थिति जो होती है वो थोड़ी भिन्न होती है। ये जरूर है कि यदि आपने एक कंपनी को यदि लोन दिया है और कहीं वहां कोई समस्या है तो वो समस्या आपके लिए हो सकती है। पर जहां आप किसी भी ग्रुप में, चाहे हम टाटास कर लें या किसी में लें, जहां 10, 15, 20 कंपनियों को अलग अलग लोन देते हैं, तो होता यह है कहीं एक कंपनी में कोई समस्या आए भी तो बाकी कंपनियों से वो दूर हो जाती है। तो मेरे विचार में आप सबको मैं फिर आश्वस्त करना चाहूंगा, मैं किसी विशेष ग्रुप के लिए नहीं, परंतु कॉर्पोरेट बैंकिंग के बारे में और कॉर्पोरेट सेक्टर के बारे में आज की जो स्थिति है, जितने वर्ष 30 साल से मैं बैंक में नौकरी कर रहा हूँ, उससे भी अधिक हो गए हैं, ऐसी अच्छी हालत कॉर्पोरेट सेक्टर की मैंने आज तक नहीं देखी है। तो इसीलिए मेरे विचार में किसी भी चीज को डिसप्रोपोर्शनेट उसको जो है एम्फेसिस देना या उसको आउट ऑफ कॉन्टेक्स्ट लेना मेरे विचार में, क्योंकि अल्टीमेटली हम जो है एक सेंस में प्रेस भी हैं और एनालिस्ट भी हैं, क्योंकि हमारा ये फर्ज है कि जो सही स्थिति जाए। तो जब हम बैंक के नतीजों की बात करते हैं, बैंकिंग की बात करते हैं, तो बैंक की बैलेंस शीट जो है उसमें कई अंग होते हैं, कॉर्पोरेट है, कृषि है, एसएमई है, रिटेल है, उसको हम मिला के देखते हैं। दूसरा, कॉर्पोरेट हमारी सबसे अधिक महत्वपूर्ण है क्योंकि 50% हमारे बैलेंस शीट का। कॉर्पोरेट सेक्टर में फिर कहना चाहूंगा, जिसकी आज जो उसकी सेहत है, जो आज उसकी हालत है, इससे अच्छी कभी नहीं हुई। तो मेरे विचार में किसी भी प्रकार की चिंता जो है उसकी कतई आवश्यकता नहीं।
दूसरा सवाल इससे अलग हटके, कोविड के समय में जब बैंकिंग सेक्टर काम कर रहा था और उसके बाद कोविड के बाद का जो बैंकिंग एक्सपीरियंस रहा है, इन दोनों में क्या फर्क रहा है और किसमें बेहतर बैंकिंग चीज रही?
तो बहुत बहुत धन्यवाद। तो ये बहुत ही एक गहन आपका प्रश्न है। तो उसमें देखिए इसके दो आयाम हैं। एक तो ये है कि कोविड से पहले की स्थिति और अब की स्थिति देखें तो उसमें एक सिक्लिकल इम्प्रूवमेंट है। तो जो बैंक्स की बैलेंस शीट्स तब से आज की स्थिति में कहीं ज्यादा बेहतर है, क्योंकि जो भी पिछले 10-15 साल की समस्याएं थी उसकी प्रोविजनिंग आज हो गई है। यदि अगर आज हमारा पीसीआर देखेंगे, प्रोविजन कवरेज रेशियो, वो 92% है। इसका मतलब अगर मेरे 100 रुपए के लोन खराब हैं उसके में मैंने 92 रुपए की प्रोविजन की हुई है, और जब भी रिकवरी अगर 25-30% होगी भी तो वो हमारी प्रॉफिट्स में ही जाएगी। तो उस बारे में एक तो सिक्लिकल इंप्रूवमेंट है। दूसरा जो एक बहुत ही अंतर पड़ा है कोविड के चलते, वो ये है कि एक बहुत ही डिजिटलाइजेशन हुई है बैंक्स के अंदर। तो मैं आपको अगर एक उदाहरण दूं, तो आज की तिथि में जब आप यहाँ आए हैं तो जो संख्या हमारे ग्राहकों की है जो बॉब वर्ल्ड यूज करती है, वो हमारी 8,000 शाखाओं में जो आती है उससे 5 गुना है। ये कोविड के दौरान ही हुआ है, क्योंकि कोविड में हमने सबने अपना काम करने का ढंग जो है वो बदल लिया है, पर उसका जो प्रभाव है बैंक के वित्तीय नतीजों पे और बैंक के भविष्य पे वो बहुत ही प्रभावशाली है। इसीलिए आपने एक स्लाइड में देखा होगा कि हमारी शाखाओं की संख्या कम हुई है, हमारी स्टाफ की संख्या कम हुई है, पर कारोबार जो है उसमें 30-40% की वृद्धि हुई है। और वो तब वृद्धि की बात हम कर रहे हैं जबकि वृद्धि की दर पिछले 2 वर्षों में काफी कम थी कोविड चलते। अब जो वो वृद्धि की दर बढ़ेगी और जो हमारे एक्सपेंसेस हैं वो नहीं बढ़ेंगे, तो उसका जो है बैंक के कारोबार पे जो है बहुत ही अनुकूल असर पड़ेगा।
Amol, sitting in the front.
Thank you. I think sir, the profit numbers are really good. Thanks. I think congrats on that part. Sir, we mentioned the corporate loan tepid, and we had seen that no major capex was done by the large corporates in last 1 or 2 years, but still your profit is really high. What are the major drivers behind your profit? Is it higher from the retail side, or also the external factors added, maybe the insurance sell or the the crossover sales which the banks made?
So I think the improvement that you see is I think part of the transformation of the balance sheet. The fact that it has become much more retail led, I think, is possibly the single biggest change that has occurred for the bank. And I think that was important because with corporate, given the fact that you have chunky loans, there's always a downside should things go wrong. So I think there's a de-risking which has happened. But fortunately also, along with the de-risking, given the fact that we are in a rising interest rate regime, you've also benefited by way of better margins, right? So even today, it is tough to actually get pricing in corporate loans. But in retail loans, there's been a significant improvement as far as the pricing is confirmed. And if you look at our figures, our retail loans have organically grown by 30% YOY. And this is a trend that you have seen over the last few quarters. Within that, you see it is spread over all the categories. The lowest growing segment in retail loans for us is home loans, which is 20%, right? That shows you how, again, diversified the growth is. To my mind, this is the single biggest change. The second part, which is to my mind particular to the bank, is again how we executed the merger. The figure that you saw in terms of branches and in terms of number of staff is because we delivered on our promise that when the bank undergoes amalgamation, we'll make sure that we get synergies worth 10,000 crores over a 5-year period. It is those synergies which are now being reflected on the profit results of the bank.
Thank you, sir.
I think behind.
Hi, sir. My name is Ankur Mishra. I'm from ET now. One question regarding international deposits and advances, both have grown handsomely. In fact, a reduced growth is there. So, what is the reason for that? If you can explain that.
So I'll just pass that question to my colleague. Lalit was heading our New York operations, which has driven probably most of the growth. So he's best placed to answer that. And then maybe if I need to supplement that, I'll do that.
Yeah. So good afternoon once again, and thank you for your question. The deposits in the international is driven by the asset creation. So basically, unlike domestic operations, banks do not raise deposit first in the international banking. They just go for the assets, and once they find the asset, the deposit simultaneously they raise and fund it. And as MD said, that our international book has grown on the asset side handsomely. For the reason is that we found the opportunities across geographies, and that's how we tap the market and we raise the resources to fund them. We are present across various leading centers, US, UK, UAE, Singapore, Australia, and there were different opportunities, and we went to that.
I'll also request Chansap to supplement it. Actually, much of the growth has happened during his stewardship.
See, a couple of facts that international banking earlier slightly wanted the business to stabilize. So major part of the action gone in terms of stabilizing the book, and that is what the growth that we are seeing. See, there was a degrowth till March 21, and there was a growth since then. So it's most of a like stabilizing the operation in terms of, and that's what the growth you are looking at. Secondly, look at the absolute number. It's something also need to account for the rupee depreciation part, which also accounted in the growth. So in that way, we are really robust growth in that, and it is basically slightly changing on the mix of the portfolio, more on the syndication space we have acted on, and that is a very robust growth and a very composite. We could have seen the new growth also has been very robust. So broadly, that's a strategy in terms of stabilizing the operation and taking to a growth path, and that is what we have achieved as on today.
I'll just supplement that in terms of giving you a flavor in terms of what to expect for the future, right? That's something which is important. So there was a context to, again, why we grew international. To my mind, it is true that in most times, the margins that you get on a domestic book are better, right? This is true in most cases. But over the last 2 years, the margins on our corporate lending business domestically had compressed because of the liquidity situation. You're not making money on the corporate lending business. So and the margins on the international corporate business were better. So it made strategic sense to deploy capital there. Now, as margins normalize in India, that is something which may not necessarily be true to the same extent. So you'll find that the outperformance of international might come down, not because the international cannot perform, but because you might find better opportunities in India. Number two, as Chansab said, there's an overstatement about 10% because of the rupee depreciation factor. Third is again the base effect that he talked of, that we actually had shed some low yield assets, and therefore the base had come down, and therefore you see a YOY figure which is higher. Now that base effect will start dissipating from March onwards. So I think what you will be seeing in the international book is a growth which is more in line with the bank's overall loan book rather than much higher than that.
Another question, you have met certain parameters, including ROA, ROE, ahead of schedule, as you mentioned. Now, what is the target for the year, and if you want to talk about the next year as well?
So I think what we are seeing is, we had said that, look, the guidance was that from next year onwards, we would sustainably deliver a return which is more than 1% in terms of ROA and more than 16% odd in terms of ROE. And as you mentioned, we have hit it 1 year earlier. Going ahead, I think there's enough room for optimism because the growth that we have seen this year to some extent will yield the income results in the next year. Having said that, it is also a fact that we have profited by the gap which has been increased between the cost of deposits and yields on advances. Now that rate of increase will come down. In fact, if you look at the last quarter, the gap was actually 40 basis points, which means our yields on loans had gone up by 40 basis points higher as compared to the increase in cost of deposits. Now that gap has come down to about 20 basis points this quarter. Now over a period of time, this gap will come down, right? To that extent, that will be a little bit of a corrective which will be there. But I think in terms of the fact that we made progress in terms of asset quality, the fact what I mentioned in terms of the operating costs of the bank being actually very low. If you look at detail and this presentation, our costs are growing only by about 6-7%. Right now, if you now juxtapose that 6-7% against the likely growth in the balance sheet of the bank, we should be seeing good margins. So we may not see improvement really of the order of what we saw this year, but I think we are confident we can sustain this as we go forward.
One last question on Adani Group, as you mentioned that it is 1/4 of the ceiling of large exposure framework limit. Can you also quantify in terms of your loan book how much of it is, or you can give the exact exposure you have? Thank you.
मैं आपको ये कह रहा हूँ कि एग्जैक्ट फिगर मैं नहीं आपको दे पाऊंगा, और आप अकलमंद व्यक्ति हैं तो आप खुद ही कैलकुलेट कर लेंगे.
I think, Preeti, you have a question? Yes, yeah, the second row, Aneet. Hi, so this is Preeti Singh from Bloomberg. So I had two questions. One was, I saw that the collections efficiency is really improved. So if you can comment on that.
Yeah, so I think this one is of course collections. I think the second is what the bank is doing in a larger context. So we recognize that as public sector banks, we have some advantages, but there were also areas in which we had lagged behind. Collection was one area. And our stance has been that if we have to build new competencies, we will actually go and hire talent from the market and see how we can make sure it delivers for the bank. And that's what has happened in the collection department. We actually went out to the market, hired a very senior professional to run the collection department for us, and who has built the department, which is why you see not only there's an improvement, but there's a sustained improvement. And I think there's scope for it to actually improve further. Another area where I think that has delivered results for us, again, is in wealth management. Viren from the wealth management department is sitting here. This is again an area which is not the traditional competency of public sector banks, but we believe that A, we must have the humility to accept where we are not as good as some of our competition. B, we must also access talent and not just be providers of talent to the market. If we put these two things together, we can actually make sure that public sector banks can perform as well and even at times outperform private sector banks.
Great. My second question is related to we just had the budget. And I'm just curious how you're thinking about some of the provisions in the budget and how that can impact negatively or positively the bank's growth in the coming year.
So look, normally when it comes to budgets, I don't think there's much which impacts banks directly. It's always a second order impact which is there. And the key areas which impact banks are again, capex, right? Because over the last 3 or 4 years, we have seen a capital expenditure deficit as far as the private sector is concerned. The government has had to do all the heavy lifting. I think there's still some room before the private sector investment really takes off. And the fact that the budget provides for such a handsome increase in the outlay for capex, I think is going to have a very salutary impact. To some extent, what you see in terms of numbers of growth for the bank is because of that, right? Areas like roads and all have performed exceedingly well. And that's largely been driven by government capex through the NHAI. The second, again, is environment, which is predictable and which is stable, both on the fiscal side and the monetary side. And I think that has been one standout feature of the last few years, when the entire world has seen cataclysmic changes, ups and downs, government opening their purse strings and then struggling to see how they can meet their budgets. We have had an environment which has been very calibrated, very stable. And I think what you see in terms of the performance of the banking sector is in large part attributable to that.
Thank you.
सर, बजट से जुड़ा हुआ एक सवाल जो कॉमन मैन के लिए है कि बजट में चूंकि स्टैंड अप हुआ, स्टार्टअप हुआ या सेमी स्केल इंडस्ट्रीज के लिए, एसएमई के लिए तमाम सारी चीजों का वो किया गया. आपको क्या एक्सपेक्टेड है कि इस बजट के बाद बैंक्स में जो छोटे व्यवसाय करने वाले लोग हैं कितना एक्सपेक्टेशन कितना अपॉर्चुनिटीज होगी आपकी बैंक्स को?
देखिए ऐसा है कि मेरे विचार में जो एक घोषणा की गई है योजना की, जिसमें जो है 2 लाख रुपए तक के जितने भी एमएसएमईज को ऋण होंगे उसमें गवर्नमेंट गारंटी होगी, बहुत ही महत्वपूर्ण है। वो मैं इसलिए कहता हूं कि कोविड के दौरान एक नई बात की गई थी, वो थी ECLGS स्कीम, जिसमें जो है कहा गया था बैंकों को कि देखिए आप पैसा दीजिएगा एमएसएमईज को, उनके लिए विकट समस्या है, उसकी गारंटी हम लेते हैं। तो एक वो मेरे विचार में बहुत ही सफल स्कीम रही है 2 दृष्टिकोण से। एक तो उससे एमएसएमईज को सहारा मिला, दूसरा उससे ये सिद्ध हो गया कि जब हम उनको लोन देते हैं तो ये निश्चित नहीं है कि वो खराब होते हैं। आज की तिथि में अगर हम ECLGS की स्कीम को हम देखेंगे, हमारी उसमें पहले हमने 14,000 करोड़ के कई आसपास बांटा था, वो 14,000 करोड़ जो है घट के आज 10,000 करोड़ हो गया, 4,000 करोड़ वापस आ गया है। और उस 10,000 करोड़ में से भी जो एसएमएस की जो गिनती है वो केवल 4% है। तो मेरे विचार में ये गवर्नमेंट का एमएसएमईज के लिए गारंटी देना ये बहुत ही लाभप्रद रहेगा, ताकि क्योंकि आज की तिथि में समस्या यही है कि जहां तक रिटेल का सवाल है उसमें बैंक्स जो है आगे बढ़ चढ़ के लोन दे रहे हैं, कॉर्पोरेट्स को कभी समस्या नहीं रही लोन की। केवल एमएसएमई एक ऐसी जो है एक ऐसा सेगमेंट है जो या तो एनबीएफसी के पास जाएंगे और बहुत अधिक ब्याज देंगे या उनके पास कोई और चारा नहीं है। तो मेरे विचार में ये जो योजना है वो बहुत सफल रहेगी, उसका बहुत ही अच्छा प्रभाव पड़ेगा।
Anita, we can give the mic to Joel here, and you're on the first. And just one note to the online participants, if you have a question, please raise your hand on Zoom.
So this is Joel Rebello. I write for the Economic Times. I just wanted an outlook on asset quality. I think it's improved. It's improved for the whole sector as such. I mean, we've been seeing this trend. If you can give us an outlook for next year. I think if I heard you right in your presentation, you mentioned you should now look at credit cost below 1%.
Indeed.
So if you could give us some outlook on NPAs, credit cost and slippages, sir. Thank you.
So thanks, Joel. Good to again see you. I think we have been speaking for the last 1 year. Good to see who Joel is, right? Great pleasure.
Thank you.
So I think there are 3 or 4 parameters which we can use to make a prognosis in terms of what asset quality is likely to be, right? One is again in terms of your current book, what is the downside? Now, as far as the current book is concerned, with a 92% provisioning, there is virtually no downside. There's probably an upside, right? As in when you get recovery, which we are doing now. Second, I think you see again the credit cost, which you saw has come down to 0.3% for this particular quarter. I think that's a fair representation in terms of how things are going to be going forward. Third is again, how does your present book look like? Are there any issues which might be developing? We might be in good times, but again, are there any problems around the corner? That is when you look at your SMAs and see how they have been. They have come down precipitously, and now for 4 quarters, they have been coming down marginally each quarter, 0.48%, 0.42%, 0.40%. So I think that's something which is working very well. Fourth, as I mentioned to you, there are things that have been put in place, the collection mechanism. That's again something which is going to stand you in very good stead. And lastly, which is probably the most important factor, is the fact that corporate is always the elephant in the room. And the fact that in slippages, corporate slippages are by far the lowest segment, even among others. I think that should give us reasonable reassurance. And last, I'll mention more, although I said last, is that again, when it comes to retail, which is growing aggressively, and legitimately people can ask the question, could this become a problem in the future? I think our experience in COVID is one which is most reassuring, because the COVID period, when it came to retail segment, was the most testing time. People lost their jobs, right? Their salaries were delayed. And despite that, we are where we are today. So I think we should actually look at the future with a fair degree of reassurance. Numbers are that things ought to be better tomorrow than they are today. I would believe so, yes. So I think gross NP is really a function of how you, again, handle write-offs. You see that gross NPs have come down by 275 basis points over last 1 year. I think there's room for it to come down substantially. Thank you.
Vishwanath, Anita right there, yes.
Hi, sir. Since you mentioned the quality of the corporate portfolio, and you said that it's been the best it has been in years, I'm just curious to understand. I was looking at the presentation, roads and roads, power, NBFC, iron and steel. These are mostly the segments where a large part of the growth has come from. Each of these segments have also led to the last cycle of problems that the banking sector faced. what's changed now? I mean, I saw your ratings are better in terms of the corporate, but ratings were great the last time also. So I don't know how relevant that is in terms of future credit quality. So I just want to understand that.
I think very fair question. So I think some things have changed. So the biggest growth actually has come from the road sector, where we actually had a very rough time in the last cycle. That rough time came from two major sources. One was that road projects were launched without land being completely acquired. The other was that the traffic did not really come the way it was supposed. And the new schemes under which you have now lent, the HAM projects, actually have taken care of both those risks. So projects can now be launched only if 90% of the land acquisition is complete. And again, since these are hybrid annuity model projects, once the completion is done, then in terms of traffic risk, it becomes a non-factor. So I think that is what is most heartening. Any crisis from which you don't learn is a wasted crisis, right? The other question is, why is it that roads have boomed and so many other sectors have not? It is because the kind of issues that were there have been taken care of. Similarly, in the power sector, you will hardly find any project under implementation which is on our books. All of them are running, yielding projects. The issue was, if you had looked at the books 10 years back, power projects might have been the same percentage, but they would have been all projects under implementation, right? That's something which has changed. Third, as we go ahead, there'll be hardly any greenfield capacity which is going to come from thermal power projects. Most of it is coming again from solar power projects, which means you're also aligned to the future. So I think there are a lot of reasons why we should be much more sanguine in terms of future as compared to the past. Actually, the fact is the economics of renewable power are making so much sense that the economics of thermal power are being challenged.
Thanks, Vishwanath. I think Hitesh had I think Ajay had a question. Did Ajay have a question? No? Then, okay, Shayad has one question. Aneet, you're on the right.
Hi, I'm from Financial Express.
Oh.
So nice to be here. So just a couple of questions. First, somebody mentioned CapEx. So when you have seen that corporates, once again.
So I think probably the time of irrational exuberance is gone, right? Where you assumed that demand would come at anyway, right? That I think is not going to be there. So there is going to be calibrated expansion of capacities. B, this is going to come from larger players who are able to absorb the uncertainty that might still be there. C, you now have a new class of sponsors. Earlier, you had the family groups, which again were putting out their money. Now you have private equity funds, which have again global standards in terms of due diligence and in terms of return expectations. So I don't think you're going to see the same kind of the cycle that we saw maybe 10, 12 years back. Having said that, we now are reaching a level where capacities are reaching about 75-80%. So it is natural that the pace of growth will be much more in the next 3 or 4 years as compared to the last 3 or 4 years. Also, we are seeing that the number of sectors where capital investment is happening has started broadening. So I think we can be confident that there'll be a significant uptick to private sector investment. But what we saw 10 years back, I don't think that is likely, nor is that healthy. Rather than happening in spurts, if it happens on a sustained manner, I think is good, again, both in terms of managing the supply-demand gap and also in terms of the health of banks.
Fair enough. Just another question on the personal loan side of things. I mean, everything seems to have grown at the personal loan rates. Patterns that you're seeing in use cases.
So let me again pass this on to Joydeep, and then I might supplement if it's required.
Yes.
So personal loan growth basically has been on the digital side. So a base of customers, as mentioned, is continuously increasing over the last 1.5 years. So with that base of customers, as we look into those balances and look at the data in terms of their spending and the balances that they keep with us, their income levels, etc., we have quite a few data points on which we can actually give them offers. So that's been a sort of a good improvement that we have seen in the personal loan space, where we have been able to
give out offers for pre-approved to our customers, and there has been a good uptake on that. So that has been a significant proportion of our personal loan growth. We started on a small base, but since the base is small, the percentage growth that you are seeing, 160% growth that we have seen is basically, that's why they explained. Apart from that, we are now also looking into the NTB segment. So apart from the existing bank customers, we are also looking at new to bank customers. So that's again a space which we see there's a lot of potential for growth in the future, because the data points are available publicly. And as we use those data points and with digital, I think there's a lot of traction that we can see there.
Thanks. So to just take one last question from online.
Yeah, I think that, yeah,
Okay,
I think she's been.
Okay, I'll just ask Ritesh's question. Ritesh asks from Indian Express. His question is, why is CASA ratio falling, and what is the outlook on CASA?
Yeah, so I beg your pardon. So I think I'm sorry, I thought the question was coming from there. I forgot online. I think when it comes to the CASA ratio, it's important to remember it's a ratio, right? It's a ratio between what is your term deposit and what is your current account in saving bank. So two things to appreciate. A, CASA has gone up, right? So about 7-8%, which is pretty much in line with what is the overall deposit growth for a lot of banks. What has happened is that because of the fact that now term deposit rates are substantially higher as compared to saving bank rates, there's a movement which is happening from saving bank to term deposits. At a time when you would get 3.5-4% on a term deposit and a saving bank was 3%, why would you take the trouble of moving that deposit? But where the differential now is 3% and 7.5%, it makes a lot of sense to do that. So as long as again rates remain a little elevated, I think it is quite natural. So I don't see this as a surprise. I think it is something that also helps bank, because if you see again where the growth is coming from, it's coming from again largely term deposits which are with maturity period of between 1 to 2 years, which means we are able to make sure that we are able to match the expectations in the current interest rate regime, but we are not committing funds at rates which might become out of market after 2 or 3 years. So this kind of growth that we are seeing, to my mind, is par for the course. It works well. And as long as you find that the net interest margins are improving, I think it's something that works well for the bank. But request Khurana Sahab if he might want to just supplement that.
Yeah, I think MD sir has covered, but actually the issue. Overall, we have been growing. Our CASA is growing, but as far as the issue is concerned, because our term deposits have increased, that is how it has happened. So this is what is reply.
Okay, I think we'll take that one last question.
Yeah, so would you be looking at raising capital this year, next year, this calendar year?
So this calendar, I don't think that there's a possibility because as we saw that even with the kind of growth we have had, sorry, my mic is off. Yeah, so I'll just repeat that. So I think this calendar year does not seem to be, or this financial year does not seem to be a possibility because as you mentioned, we are at about 16% in terms of capital adequacy. Going ahead also, if our current prognosis that there may be a little bit of a slowdown in terms of loan growth as compared to what we saw this year. We have seen loan growth over 20%. I think there might be a little bit of a slowdown there. And if profitability were to sustain or to improve, then I think we should be self-sustaining in terms of funding our growth.
I have one last question.
Hi, I'm Hansini from the Window Business Line. Your presentation gives me split of all the NPAs on the retail side, but can I get an overall number for retail NPA? That's one. The second part of the question is slippages from retail and agri loans seem quite sticky at that 500, 550 odd crore levels and at 700. Is that the trend that you continue to, are you likely to see through FY24 as well?
Overall number of retail NPA is 4,000 crores, 4,100 crores. And
percentage of assets, sir?
Percentage of 2.35.
2.35.
Yes. And the second question was the slippages. See, when the rates were increasing, we were fearing that there could be delinquency could increase. But if you look at our last 3 quarters, how our agriculture or MS, the retail, the NPA addition is almost the same. So there is no increase in these two sectors as far as NPA is concerned. The delinquency is concerned.
So just supplement that. So if you look at two things, right? One, we underwent 2 years of COVID. Now we are seeing a time of rising interest rates. So even with these two changes, you have seen that actually retail NPAs accretion has not gone up. As you said, it is stable. Number two, it is stable on a book which is growing very fast. So you have a 30% growth rate in the overall book, but the accretion you're seeing has not gone up. So to my mind, again, it is something that works well from the bank's viewpoint. Third, normally what you find is that the stock of corporate NPAs gets impacted by write-offs. The stock of retail NPAs does not. So what you're seeing is also an accumulation of the past.
Okay. If I can ask one more question, sir. You spoke about a large corporate group. Has any of the group companies slipped into even an SMA level for a day, fortnight or whatever in the past 2 years?
So as I said, nothing specific in terms of group and companies, but if you look at figures of SMEs, right, which you can see for the last 4 quarters, if there had been any large corporate movement, that would have got reflected very clearly. Apparently, it's not there.
Thank you.
Okay, thank you. I'm sorry, we'll have to close now. Thank you everyone for joining us. Some tea, coffee outside, so please join us. Thank you.
Thank you very much and look forward to seeing you next quarter.
Thank you very much.
Thank you.
We have the analyst meet at 3:30, so request all the CGMs, GMs, heads of departments to please come back at 3:30. Thank you.